right? But if you look at fundamentally what happened here, I think this was just a robust quarter that shows that a lot of the deep-seek worries, that was smoke, no fire. I mean, these are numbers that show this AI revolution is actually just hitting its next gear of growth. And there's only one chip fueling this, and it's the person wearing the black leather jacket. It's Godfather of AI, Jensen Nvidia.
You know, it's interesting. Speaking of Jensen Huang, I think it was almost a year ago when Nvidia unveiled their next generation of chips, Blackwell, with a lot of fanfare. And there was a very aggressive push by Nvidia to get that product into the hands of customers because it's sophisticated, it's powerful. For the Wall Street fans, it's very expensive and there's a lot of demand. But I think it seemed like the takeaway from last night was to get that product into the hands of customers quickly and efficiently came at a short-term cost. And NVIDIA's message last night was, yes, that hurts our profit margins in the short term, but people love the product, demand is great, and over time will make up whatever costs we had to incur in the short term.
NVIDIA's latest quarter highlights the ongoing strength of the AI revolution, with NVIDIA's powerful chips driving this growth. Despite concerns about deep-sea risks, the results proved those worries unfounded. NVIDIA's aggressive push to deliver its advanced Blackwell chips quickly came with short-term costs, impacting margins. However, strong demand and customer enthusiasm signal that these investments are likely to pay off in the long run, reinforcing NVIDIA's dominance in the AI chip market.
Was that your takeaway?
Oh, yeah. I mean, and that was a great summary, but let's put this in perspective. If you go back 2 quarters ago, the view is this would be $3 to $4 billion a quarter. It was $11 billion. And ultimately, I think it's going to be on a trajectory to $15 to $20 billion per quarter. So I think it just shows in terms of any sort of the margin deterioration, that's something that's just going to continue to ramp. And that's why I think 175 base case, $200 bull case in terms of NVIDIA. And look, the haters hate. They're always going to try to poke holes. They've missed every transformational tech stock the last 20 years. I believe they'll miss NVIDIA, and we believe in the rise to $4 trillion market cap.
When you talk about a Wedbush target price in the range of 175, and you're alluding to maybe even more potential upside for a stock that begins the trading day in and around 130, what are the things you have to watch for in between the stock, in your opinion, getting to that level? Could we see more volatility?
Look, of course you can see volatility, and you look at export controls, every 5 minutes something coming out of Trump in terms of tariffs. There's going to be a lot of noise. You got to see through it. You'll have the big conference NVIDIA has next month. And look, 15 to 1's demand to supply in terms of these chips. And when it comes to DeepSeek and some of the others, I view that DeepSeek is actually bullish for NVIDIA and the broader AI revolution. John, it's about the multiplier effect. It's not just about NVIDIA. For every dollar spent on NVIDIA chip, there's an $8 to $10 multiplier across the rest of tech. That's why this is going to be a tech bull market going forward.
NVIDIA's growth continues to defy expectations, with quarterly revenue surging to $11 billion, far exceeding earlier projections of $3 to $4 billion. Analysts now predict NVIDIA's revenue could climb to $15 to $20 billion per quarter, reinforcing its dominance in the AI sector. Despite concerns about volatility and geopolitical risks, NVIDIA's strong demand, estimated at 15 buyers for every available chip, underscores its market strength. Additionally, NVIDIA's influence extends far beyond its own sales, driving $8 to $10 in tech investments for every dollar spent on its products, fueling a broader tech bull market.
NVIDIA now below DeepSeek lows, suggesting that January 27th sell-off might have been more than just a knee-jerk reaction, potentially more of a structural shift. Now, concerns, of course, are piling up. You've been talking about it all morning. There's CapEx and efficiency questions, the threat of an expanded chip ban, and now, of course, these new China tariffs. Now, NVIDIA is the poster child of this unwind, but it is hitting AI and tech more broadly. The SMH Semi ETF down nearly 10% this year, and all of the mega caps, except for Meta, are underwater. Now, here here at the Palace Hotel, the CFOs of Alphabet and Microsoft, they're set to speak today. Nvidia's CFO, Colette Kress, she's set to speak tomorrow. The stakes really couldn't be higher, especially given this sell-off and concerns around the AI trade and tariffs. Key question, will they hedge or temper language around CapEx as tariffs introduce new uncertainty? Some investors, like Dan Ives in your interview a few moments ago, they have expressed skepticism around these huge ramps in spend, saying that some level of digestion is needed. So could any of these CFOs allude to that in any way?
Josh, Kerry mentioned Nvidia being higher today. You know, that's been a pain point.
Nvidia's recent dip below its previous deep-sea low suggests more than just a brief sell-off. It could signal a broader shift in market sentiment. Rising concerns around CapEx efficiency, potential chip bans, and new China tariffs are fueling uncertainty. Nvidia, as the face of the AI boom, is feeling the pressure, with the semiconductor sector broadly impacted as well. With key CFOs from Alphabet, Microsoft, and Nvidia set to speak, investors are watching closely for signs of caution or reduced spending forecasts. Any hints of a slowdown could weigh heavily on the AI trade.
Within the market, Bernstein's Stacey Rascon says valuations are looking increasingly attractive. They suggest that that stock has done historically well if you buy it at 25 times or lower. It's obviously had a huge pullback. We've suggested, well, you're not really going to get a better feeling market until the likes of Nvidia looks a little better in its own right.
I mean, there are so many green stocks right now that we should be talking to, like eBay, Alphabet, McDonald's. Like, these are pretty big market caps. But Scott, you're right. To that point, nothing is big enough to offset Nvidia. There's no 10 stocks that are big enough to offset Nvidia. So I do think it's important for maybe not necessarily overall volatility, but just for the indices to kind of find some support. You kind of have to have a name like Nvidia bottom and go green. Look, 26 times forward earnings with a 50% growth rate, a buyback, and arguably some of the best news flow of the year out of any stock still ahead, including a huge developers conference in March. Why wouldn't this stock be a buy here? So I agree with that sentiment. And, you know, if I'm out looking for things to do, and I haven't done this yet, I would have it on the list.
Nvidia's recent pullback has made its valuation increasingly attractive, with analysts noting the stock historically performs well when trading at 25 times earnings or lower. Despite positive movement in other major stocks like eBay, Alphabet, and McDonald's, Nvidia's sheer size makes it crucial for broader market stability. With strong growth forecasts, a stock buyback, and upcoming events like Nvidia's Developers Conference, many see this as a key opportunity for investors looking to capitalize on the AI boom.
Nvidia, to your point, its stock is on a wild ride, trading at a market multiple that almost matches the S&P 500. So when normally it should be trading at a premium because it's a growth company still. And that raises the question, is Nvidia undervalued? Some are saying yes. Or is the market headed for a fall, for that market multiple to be lower? There's still a lot of regulatory risk for Nvidia. AI diffusion rules restricting chip exports to certain countries that would come into play this May. The possibility of further China bans, specifically the H20s. We talked about that yesterday, but just it is a big portion of their business to China.
After Q4 earnings, that's not justified, right? Like, but we're talking about some of those names, like Nvidia's like, oh, maybe they'll grow earnings only 65% of 70. I mean, come on, no? And then like, oh yeah, that needs to be 30% down. Really? On that kind of news? No, that's way, way, way overdone to me. So even in the Mag 7, even in tech, and then overall then obviously in the US, I think you want to buy that as well. It's not a point of buying Europe over the US, it's buying Europe and China and the US. It's actually really broadly where things are still pretty all right.
We will leave it there. That's right.
I think today, when you look at the rally that you had in Nvidia, yeah, it was just pressed down. It was down nearly 30% from those recent highs. It was a crowded trade. People got out of it, and people are going to be looking for opportunities to get back into both of them.
And I think we were correctly cautious since that January engulfing pattern across the desk, and that proved to be right. And today's the first day in terms of price action. You can actually make a case. You can play it from the long side. I'm not saying it's going straight up from here, but that 110 low, to your earlier point, that was a low that we saw basically back in September on heavy volume, which is a good sign. So for me, for the first time in a while, Nvidia actually looks nice for a trade.
Because we have export restrictions on quite a few countries, but apparently not Singapore.
Yeah, and I was just there on Friday, right? So I could tell you the sense is that these export controls, it's not going to be really constrained to ultimately Singapore. And I think the fear here, and I think you're seeing on the Nvidia sell-off, is that this is going to be a huge ripple effect. It's going to be harder and harder to get those chips. That's something, even though there's the China piece, it could have a much broader impact across the region. I think bark's worse than the bite. I mean, as someone, in Asia for 2 weeks, I think it's when I get the fears, but I don't think this is something that's really going to be as much of a restrictive factor, despite everything we saw today.
Do you think it's...
Nvidia's recent decline has sparked debate about whether the stock is now undervalued. Despite trading at a market multiple similar to the S&P 500, unusual for a growth company, some argue the drop was overdone. Regulatory risks like AI diffusion rules and potential chip export bans to China remain a concern. However, analysts point out that Nvidia's earnings growth, even at 65 to 70%, is still impressive. The recent pullback, down nearly 30% from its highs, has created a potential buying opportunity as investors look for re-entry points. While export concerns persist, they may have less impact than feared, with regions like Singapore seemingly unaffected.
Deep-seek concerns that are spurring this next wave, potentially, of regulation. And I guess perhaps just as importantly, has the train already left the station when you look at homegrown chip development in a place like China?
Look, I think DeepSeek, that was a shot across the bow, because I think everyone recognized, okay, they didn't do this in the basement with no chips. And it comes down to, if they use next-gen Nvidia chips, what does that mean? And I think, look, the broader fear, especially that you see in the Trump administration, is, okay, we got restricted more and more. So I think what you're starting to see from an investor perspective is, okay, what does this mean for Nvidia? Second derivatives. Is this going to crimp the supply chain? Now, we disagree. I think when it comes to tariffs, we've seen many times, this is one, it's going to have an impact, but I do not believe it's going to have such a pronounced impact. I think it's being factored in here in terms of supply chain. Still 15-to-1 demand to supply, even when it comes to Blackwell.
Deep-sea concerns have heightened regulatory fears, especially regarding Nvidia's next-gen chips potentially fueling advancements in regions like China. While the U.S. may tighten restrictions further, analysts believe the overall impact on Nvidia's supply chain will be limited. Demand for Nvidia's chips remains incredibly strong, with 15 buyers for every available chip, reinforcing the company's resilience despite geopolitical pressures. Now, if you found this video valuable and you want to diversify your investments beyond traditional stocks and bonds, I have just the thing for you. Even though I believe that investing in a low-cost index fund is the best long-term investment for the average Joe, the benefits of solid physical gold are hard to deny. I think of physical gold as insurance against unpredictable times, and I'm not the only one. In 2023, central banks added over 1,000 tons of gold to their reserves, the second highest annual purchase in American history. And in 2024, central bank got another 290 tons of gold in just the first 3 months of the year. If the biggest banks in the world are buying tons of gold, I'm sure there's a good reason for it. I found a company that allows ordinary Americans to own and securely store physical bars of gold as part of their IRA account. The best part is that they're giving away a free guide to teach you all about investing in solid physical gold. If you want to learn more about how gold can protect your retirement savings, just click the link in the description to receive a completely free gold IRA guide.